Welcome back everyone to Financial Shenanigan, and we all did it. We survived the craziness that was 2020, and I wish each and every one of you a better 2021, and hope that you are at least able to celebrate the holidays despite the ongoing pandemic. I did take a break from YouTube after my last video to spend some time with my family, and I ended up drinking way too much coquito. If you haven't heard of it, oh man, you're missing out. And to answer this question, yes you can. But I'm back again, and let's start off 2021 by looking back at 2020 to recap what has happened to my portfolio in the month of December. And while I'm recording this on January 3rd of 2021, the numbers that you'll be seeing today in this video were all taken on December 31st, and my portfolio, it ended 2020 with a balance of $28,366.41. which is a positive change of $1,367.08, or is up 5.06% when compared to the November portfolio balance. And the great thing is, the majority of the gains came from stock appreciation, since I only deposited $160 in December, which brought my total deposit to my M1 Finance portfolio to $21,145. Now this next column makes me very happy because it tallies up my total gain, which is now at $7,221.41, meaning my portfolio has gained $1,207.08 just in December. Of course, the stock market as a whole has gone up like crazy since the March lows, but I'm not going to let that take away from how my portfolio is performing. Next, we have dividends. Even though my focus is on dividend stocks in particular, I did end up selling out of Procter & Gamble and Johnson & Johnson in November, which is two of the must-own stocks if you're a dividend investor. But I did receive $56.35 in dividends in the month of December. $21.17 it came from Costco. However, this isn't the typical dividend amount that they pay, because last quarter, if you compare, I only received $1.31 from them. What actually happened in December in particular was that Costco declared a special dividend of $10 per share. And thanks to the pandemic, which caused lots of people to stock up on essentials at Costco, they ended up deciding to take $4.4 billion of their existing cash balance to pay out the special dividend of $10 per share. And while this is the first special dividend that I've received from Costco personally, this isn't the first time that they've done this actually. At this $10 special dividend, it is their most recent one. It's the fourth one that they've done and the largest amount that they paid out. But back in 2012, they first gave out $6.51 per share as a special dividend, and then they did it again in 2015, which was $4.80 per share, and the last one was at 2017 when they paid out $7 per share. In other companies, they also do pay out special dividends on occasion. The most recent one was Wingstop. They paid out $5 per share. But as always, when it comes to dividend stocks, it's never a good idea to buy solely because you see that a stock is paying out a large dividend amount, or on the off chance that you think that the company is going to be announcing a special dividend. I'm sure I'll eventually get to an age where I'll pay more attention to dividends, but for right now, I'm more focused on growth stocks in particular, and I just take these smaller dividend payouts as, nice little bonuses each month. In any case, I ended December with an uninvested cash pile of $2,200.25, which is below the 10% to 30% cash position that I like to hold, but this is more than enough to take advantage of any market dips or correction that might happen. And between my Roth IRA and my wife's Roth IRA, we still have $8,900 left of our 2020 contribution, so I'm going to be funding it more aggressively right before tax day, which comes out in April. And in the meantime, that money is going to be sitting in my Yada savings account, where it's going to be collecting a higher interest than if I have to just leave it in the cash pile of M1 Finance, or if I put in the savings account in another bank. And if you'd like to open up your own Yada savings account, make sure to use my referral code that you see on the screen to receive 100 tickets for a chance to win up to $10 million. And since you're down there in the description, you'll also find my M1 Finance referral link, where you'll be able to get your free $10 by simply opening and funding your free M1 Finance account. Normally it's a $10 sign-up bonus, but they're doing a promotion so you get $20 extra. So make sure you get some of that sweet free money. But now that we have all the numbers, we can finally calculate my portfolio return since I started investing with M1 Finance since September of 2018. Remember that the with cash includes the uninvested cash pile, while in the without cash, I calculated return solely on what I am invested currently. And after running all the numbers, my with cash return is 34.15% or 15.70% return every year. But if we forget my cash pile of $2,200.25, the percentage jumps to 38.12% or about 16.94% per year. In comparison, the S&P 500, it returned 30.8% in the same period, so I'm currently beating the overall stock market by a couple of percentages. Of course, whether I'm able to grow my lead or if I end up failing to beat the market, it remains to be seen, but so far so good, if I don't say so myself. Now, this next column is honestly my favorite part to calculate every month because it helps me visualize how much my portfolio is going to grow into. As always, we're going to jump into investor.gov and head over to their compound interest calculator. My initial investment will be the portfolio balance of $28,366.41, and we won't be putting any more money, so we're going to add 0 to the monthly contribution. And we're going to let it compound for 31 years until I hit 60 years old, and let's take the average stock market return of 10%. And when we hit calculate, it's going to let us know that my current December balance is going to grow into $544,474.59 when I hit the age of 60 years old. I mean, just look at this number. Almost $29,000 to more than $500,000. This is the power of compound interest, and this is why I love investing. And going back to the spreadsheet, as always, we're going to end today's video with a thank you to each and every one of you who subscribed, liked, comment, and watched my videos. And even though we haven't been monetized yet, we did end December with 427 subscribers. And while I wasn't able to reach my goal of 500 subscribers by the end of 2020, I'm still super thankful of passing the 400 subscriber milestone. But that's it. That's all that numbers recap for December. And with today's video, I officially kickstart 2021 here on YouTube. And as always, I promise to keep being 100% transparent on how my portfolio is performing. And if that's something that you think you enjoy, don't forget to subscribe to stay up to date on all the good days and the bad days. In my next video, as a recap 2.0, I'm going to be going over all of my stock trades that I've done for the month of December. If you're still watching up to this point, you are the real MVP. I'm going to give you a hint of a big stock move that I decided to do in December. You know Tesla, the stock that has gone up more than 700% in 2020? Well, I decided to sell some of it. So make sure to watch the upcoming video to find out why. But that's all I got for you guys today. Thank you so much for stopping by. Happy investing, stay safe out there as always, and I'll catch y'all next time with more financial shenanigans.